We're all waiting in anticipation for the Fed's decision on Wednesday. Will they cut interest rates by 50 basis points? Now, a lot of people, Jim, think that the surprise rate cut last week wasn't enough because now the markets are still
but there's
down.
also, I now see the backlash that people say, well, we don't even need it. They're looking at a company like Honeywell or United Technologies saying we don't need it. No, it's not the economy that needs propping up. I think the economy is actually quite strong, the export economy. It's the domestic economy. Financial stress that I'm worried about. I think that the economy is not ready for AMBAC, and the financials not ready for AMBAC or MBIA to default. It's not ready for what would happen if we let a SunTrust or a Countrywide or Bank of America swim on their own without rate cuts. Those companies are doing quite badly. I would urge people to look at the E-Trade quarter, which is a really tough quarter if you take a look at their Q. And what I keep hearing about is that it didn't work to cut. I guess that's classic example of people looking at the Dow Jones average and not looking at the indices. The consumer non-cyclical index plummeted. The drug stocks plummeted. Those are recession stocks. The bank stocks were up between 10 and 25%. The HGX was up big. Some of the home builders I love, like Toll, went from 16 to 23. Rylan went from 20 to 28, and I just think that to look at the market as a whole, the S&P as a whole, in relation to what happened with the emergency Fed cut is wrong, and to look at the economy and try to say that they don't need more cuts is just simply no homework. People are doing no homework. Now, I don't blame them for doing no homework. There's a flood of reports that came out. All of the Qs of the banks are really hard to read. I have a forensic accountant who goes over them with me. They're extremely difficult. So it's entirely possible that the homework is just too hard. This is one of those situations where I think people who don't really know the subject matter are taking a test on it every day and flunking. And I would ignore many of the articles that don't recognize the fact that there was a major move in the financials and that what they really need is to be able to have their stocks go higher so they can recapitalize. Bank of America was the best example. Bank of America had one of the worst quarters I've ever seen. And but I don't think that they would be hard-pressed not to admit that. I think Ken Lewis basically told me
But the
that
stock
it
was
bad.
up. Because
it was up because the Fed cut.
Yeah.
And then they were able to do that giant preferred, which raised billions of dollars, and that's because of the Fed cut. So the articles are just so stupid, and it's so painful because most of the people don't read the Qs, they read the articles. And the articles that I've read are either that the Fed doesn't need to cut or that the Fed cut didn't work. And that's just painful for me to read. I have to tell you, I could write those articles to the cows come home. They're really easy to write. And if I really wanted to send you down the wrong scent, but I just can't do that.
It's an interesting point that you make because Marek Fuchs, who writes Real Money, he has been harping on this for a while now, just how that there's such a lack of understanding from the traditional media and what we're seeing clearly happening in the financials, whether it's Bank of America or any other bank.
I think that he's done a great work. We have to remember that there are no real instances of Fed really cutting rates dramatically that hasn't led to much higher stock prices. So it's really hard to endorse the negativity. All
right. Thank you, Jim Cramer on Wall Street Confidential. Stay tuned for more at TheStreet.com TV.